Welcome back. I hope you enjoyed the break and are ready to continue. I would like now to introduce Sir Robert Steepman, CEO of UK Debt Management Office, and Pablo Ramon Laca, Director General of the Spanish Treasury and Financial Policy, for our fireside chat, The New Approach to Government Debt. Welcome, Robert. Welcome, Pablo.
Good
The
to see you.
COVID-19 has pushed up government borrowing substantially, requiring debt management offices to sell a much larger value of bonds than normal. Presence of a deep and well-functioning sovereign market is critical to a DMO's ability to successfully deliver its debt management objectives. So how have DMOs fared during this very challenging period? I think this is a question I could ask to all DMOs in Europe or even globally, but we have got two representatives of the most significant DMOs in Europe. So I would like to pose this question first to Robert and Pablo, and then we will continue our discussions from there. Robert.
Okay, well, let me just kick off and say thank you for that introduction. I mean, the risk of, I want to avoid this whole session descending into too many cliches, but it really has been an unprecedented time. And I've been actually doing this role for nearly 18 years, and I cannot recall anything remotely like what we've seen this year. Primarily, I think, because of the sheer volume of what we've had to issue. But it's also fair to say that it has gone remarkably smoothly and in a way which just a few years ago I think would have been unthinkable. And I would put that down to two things in particular. One is just the overall health and depth of the market compared to what it was, let's say, 10 or 15 years ago. I mean, it would be unthinkable that we could have raised, as we have now done, approximately 380 billion in the current financial year since April, just a few years ago. And people forget that we can only do that because the market is there. That's the first thing. The second thing is, also some people now take for granted, given the experience that we've had over the last months, just how well everything has held up, given technology and developments in technology. And it would have been, I think, literally unthinkable to imagine a well-functioning market, certainly at the height of the lockdown that we saw in March, April, into May in particular. But even now, many of us, as we are today, are working either remotely or using virtual technology.
Thank you. Thank you. Pablo, what did you experience in Spain, in the Eurozone, in one of the largest debt markets in the world?
It's been as Sir Robert says, it's been a strange year, and it's been a strange type of crisis, one for which there's no textbook for how to deal with this crisis, and there are certain extraordinary things about this one that have been a very significant determinant of what's happened. First of all, for Spain at least, the increase in issuance has been in Q2. Most of it has been concentrated in one quarter. The first quarter was business as usual. We were all happily progressing with our funding program until we began to realize that this thing might actually provoke a major slowdown. Then in Q2, Spain was confined completely towards the middle of March until the middle of June. And that is when most of the issuance had to take place. There was huge uncertainty as to just the depth of the recession that was going to be provoked, the extent of the disruption that the economy would suffer, that could turn into long term. So initially for DMOs, it was issue first, ask questions later. So then we had to test the machine that we have, unleash the full power of the DMO, which usually is quite restrained, and test the market. The uncertainty, the volatility was quite effectively, proportionately, of course, but effectively dealt with by monetary authorities all over the world. And then it was about there being sufficient market for all the issuance. As Sir Robert said, for an entire quarter in which we were all issuing full speed, we were all at home using retail technology for the wholesale business of issuing, pricing, quoting, trading, and investing in government bonds. Anecdotally, during a pricing call of a syndication, you could hear babies in the background. The infrastructure would have that the infrastructure worked is a tribute to how much we've progressed in the real economy. And it would have been unthinkable 10 years ago. So I can only imagine if this had happened 10 years ago. Very soon, though, into the summer, we realized that this was a strange crisis because the minute you lift the restrictions, the economy starts churning GDP again very, very quickly. It's not a typical crisis. Tax revenues came in very, very quickly, much more than we had expected. And so we found ourselves having to slow down very dramatically within the DMO. So the market can take a huge acceleration with all of us at home, and then a huge deceleration as Spain has had to implement in Q4, only to start again the following year in 2021. So what does it look like for 2021? Still a lot of uncertainty. There's money coming in from Europe, alternative funding sources, but we don't know exactly when. So we become, and here I am stealing from Sir Robert, cash managers rather than debt managers for the next year. So we can expect much more flexibility from DMOs at the expense of a little bit of predictability. So we're going to issue a lot very early on and then revise frequently our programs. And there's a skew there on the downside. So into the summer, we will revise downwards our funding objectives as European money comes in. This will complement the European funding very nicely because the EU is likely to start issuing for the RRF later on in the year. So flexibility rather than at the expense of a little bit of predictability. That is how we made it through 2020. And that is how we expect to be able to cope with 2021.
Thank you, Robert. Thank you, Pablo. I think that flexibility is going to be a motto for the near future. And as both of you pointed out, you had to move from an era of relative predictability where DMOs prided themselves of how predictable you were, and now the scene changed completely. So what I would like to ask you to elaborate on a little bit is how you quickly implemented this framework of flexibility in which you have uncertainty on the revenue side, uncertainty on the spending plans as governments kept announcing significant spending programs and support programs by the day or by the week, and as well as the unpredictability of market reactions and the depth of the market in a crisis time. So what sort of framework did you put in place to do these revisions of your planning, your issuance? How did you communicate this to the market? How did you engage with the market participant? How did you change your pattern of of auctions, syndications, or the tools you use to tap the markets and access the markets? And what do you expect on the way forward in this respect, given that, for example, right now we are in a second wave of the pandemic in Europe, which is hitting relatively hard again. But then, of course, there are emerging hopes for vaccines on the way forward with uncertainty of the timeline. So there's still a lot of uncertainty as we speak. So what I'd like to understand is how you changed your framework, how you communicated it, how you adopted it, and how it was received by the markets.
Okay, perhaps I'll just have a go and try and answer that. And it's a really good question, and Pablo's hinted at it already. There is a clear trade-off which we and every other major debt manager had to make between what I would call predictability, and we always bang on as debt managers about predictability, probably because being predictable and being boring comes naturally to some of us. But the trade-off was around, as I say, the strategy which we have, if you like, held dear for 25 years in the UK, for literally a quarter of a century, of trying to tell the market as much as we can in advance, giving the market full notice of our plans. And as a result, the market has honoured that, if you like, through finer pricing. And we are not paying what we used to refer to, probably correctly, as an uncertainty premium. And trying to sort of trade that predictability with being, as Pablo says, flexible. We've all had to be flexible in ways which we didn't really anticipate. That's the nature of being flexible. How have we changed the framework? Well, I would like to think that we've adapted the framework. We have not fundamentally shifted the framework or the strategy. And what do I mean by that? Traditionally, we would always announce ahead of any financial year how much we think we're going to be issuing in terms of bonds in the coming year. We did that as early as the 11th of March. By the 30th of March, we'd torn up that plan and realised that the annual financing plan, which was announced at approximately £156 billion, you could consign that to ancient history. And then we thought, okay, well, what do we know? The country had just gone into lockdown. We knew that there were going to be significant funding requirements. We did not know the timing of those funding requirements. So we started off by just saying, let's give the market as much information as we can at that point where we knew very, very little. So we told the market we're going to raise just in the month of April alone 45 billion. And then a few weeks later, in April, we then gave more information, specifically through the period May through July, so 3 months. And then indeed later in June, at the end of June, we talked about the period in particular all the way into the end of August. And again, then we later on have extended that until November, the end of this month. And next week, we hope to tell the market what our funding requirement will be for the rest of the financial year. In other words, until the end of March. Now, what we're not trying to do is give piecemeal information and hold anything back. What we are trying to do is to give the market as much information as we reasonably can do under the circumstances. And my sense is that the market understands why we are not in a position to give the same overarching information about the entire year that we would have done in normal times. The market understands that, and as long as we have a dialogue with the market, we'll take them with us. Second part of your question about what have we changed in terms of our approach to the market and our operations? Well, until April, we had never held 2 auctions in one day. When we realized the scale, the very approximate scale of the financing requirement that we would be needing to deliver, it was clear that just doing one or two or three auctions a week, as we had done always until now, was not going to work. We needed at least 4, sometimes even 5 auctions a week. Now, in theory, we could have stuck to only holding one auction a day, but this is quite important in terms of how we approach the market. We decided relatively early on the importance of actually getting market focus for specific operations. And if you ask someone to focus, there comes a point when that person or the other side will say, you know what, I don't really want to focus too much. And not the whole of the time, because we can't. So we've chosen certain days where we hold 2 auctions a day, and other days where we are not holding auctions, and we let the market price and reprice as necessary. That was the first thing. The second thing is, in terms of our syndication program, which we've had in place now for just over 10 years, we expanded that also into maturities that previously we've not utilized. So previously we have not syndicated anything in what we call the medium part of the curve, namely 7 to 15 years. That's changed. We launched a major large benchmark back in May, and that changed fundamentally the dynamics of what we were doing. And the market has accepted that, and that was a 10-year. We will still be using syndications in the future, in particular for longer dated stuff. But to make that change, I think was very important also in helping to provide liquidity to the market as well. I'll leave it there.
Thank you.
Well, yeah. As for us, we were very sincere from at a very early stage with investors and with primary dealers as to the degree of uncertainty, and we were very we came to terms with the need for flexibility very soon, very quickly. We did an auction on March 19th, which was the following morning after the ECB's announcement of the pandemic emergency purchase program. And in our dialogue with primary dealers, we were very frank with them. There was also investor calls. We syndicated a 7-year on the 24th of March, and this was the darkest hour for the Spanish market. It was after the PEP announcement, but PEP took some time to be implemented. So it was all very. There was a spectacular announcement, and then it took a couple of weeks for it to truly show what it was capable of. Right? So there was a lot of uncertainty. We did an investor call earlier that day, and I remember just how frank we were about the macroeconomic uncertainty, the uncertainty towards economic policy, how to implement different measures to cope with the mobility restrictions, and we were syndicating a 7-year, which we've never done. So we added 2 new points to the syndication schedule, a 7 and a 20-year. These syndications were bigger. The 7-year was a 10 billion syndication, not bad for an off-benchmark type of syndication. And the 20-year was a 12 billion, and there was an earlier 10-year of 15 billion. So they were bigger, and we changed how we price our syndications. We usually price against the mid-swap curve because it's usually more stable, and it protects the Spanish taxpayer, but exposes investors that are in the book to more volatility in the Spanish curve. And so we accepted pricing against our own curve in that way, assuming the intraday volatility and protecting the participants in the book from the volatility in the underlying Spanish curve. So that was a concession we made to the volatility and to the need to fund. In auctions, they became bigger. We added an additional bond. Usually there's up to 4. Now there is up to 5 ISINs being issued in any particular bond auction, so that the total amount could be bigger, but the total amounts issued of each bond wouldn't have to change. Right? So usually we will issue between 1 and 2 billion of any particular bond. We retained that, but we added an extra one to the mix so that we could issue more earlier. Right now, there is a different type of uncertainty as the darkest abyss that we were staring into mid-March. Right now, there is bounded uncertainty. There are many things we don't know. How the pandemic, the second wave, will evolve, whether there will be a third wave. Spain is very dependent on how Europe is doing because we are an exporting country for services, and our production is very intensive in interpersonal relations, right? So we're very sensitive to the evolution of the pandemic. There is the implementation of the investment program from Europe. There is Brexit. There are many sources of uncertainty, but there are a few things that we do know, and that is becoming more and more clear. First of all, when you lift restrictions, the economy picks up growth very, very quickly. Spanish growth in Q3, quarter on quarter, was 16.7%. It's a very, very significant rebound the minute you lift mobility restrictions. So estimates that put us at minus 12.8, for example, are already a little out of date because they don't incorporate this huge increase in Q3. We also know that there is encouraging news on the vaccine front. And the uncertainty is about how quickly it can be implemented. But the light at the end of the tunnel is already visible. So that is already better than mid-March. And then lastly, something related to the debt market is the interest burden is falling, and it will continue to fall for some time, regardless of what happens for reasonable bounds, right? But regardless of what happens to the stock of debt, because there is a path dependence in Spanish, others like us, because we issued at higher rates in 2012, 2013, and those bonds are maturing, higher coupons, and they are being replaced with much, much lower coupons. And so even though we are increasing our stock of debt, the interest burden, the cost of holding that debt, is becoming lighter and lighter. So this gives us a great opportunity into 2021. So there is uncertainty, and we're going to have to be very flexible, but that uncertainty is a lot different from what we saw in the middle of March. So in that sense, it is a much better situation.
Thank you. Thank you. I will try to follow up on this with a question which is coming from the audience, and it relates to Sir Robert's comments on about the depth of the market. And the question relates to the central bank purchase programs. So how did these announcements, which of course were very positive from a debt management point of view, and sort of providing underpinnings and assurances to the markets, how did these announcements and the programs, and Pablo, you made reference to the PEP already, how these announcements and the actual purchases of central banks interacted with your program, and how much you felt the coming from this?
Okay, let me try and answer that one, the one bit directed to me, but I do think this applies not just to the UK, but actually anywhere in Europe,
Yeah,
and if not even globally.
absolutely.
The role of central banks over the last months, and their support in particular for instance, through not just interest rate policy, but also QE, has been absolutely crucial, but perhaps not in the way that some people might easily think or obviously think. There is a little bit, in my opinion, a little bit of a myth around the role of central banks. And it can become almost a political issue if some people say, oh, well, it's very easy. You're just selling something, you're issuing something which is then sold directly to the central bank. That does not happen. It doesn't happen here in the UK. We are not, this is not remotely anything to do with monetary financing. But what the central banks have done, and the Bank of England has done in particular, and I think sometimes actually, they should get a fair bit of credit for this, is that at key moments over the last 8 months, 9 months now nearly, they have stabilized market conditions. They have supported market functioning, good market functioning. And that was clearly absolutely essential to us because we use the market in order to fund government. But it was also essential for the wider market. And I think this is relevant perhaps to some people who are participating in this conference. Without the without the, if you like, the credibility and the assurance that the market will function well, our primary dealers are going to be reluctant to participate. What the Bank of England has done here in the UK is to provide assurance at key points when, in particular as a period in March, when market functioning perhaps wasn't so healthy. And I think that has done a huge amount for the wider market, not just for us, but for the investor community. It's given them confidence. And I can point to any number of syndications that we've done during this period where we've also had record order books by investors, not our central bank, by real investors. Why? Because they felt confident that this was a market in which they could operate and find the necessary liquidity for them to carry out their investment strategies. So I just think that to try and answer that specific question is an important point. And I think some kudos really should go to the central banks globally because they've all done something rather like this as well.
Thank you. Thank you, Pablo.
Yes, and anecdotally, I'll just say, first of all, the auction of the 19th of March, we announced a target size between 4 to 5 billion, and that was before the announcement. So issuance happens regardless of monetary policy. Price will adjust, but issuance happens regardless of ECB announcements. Moreover, we've tapped the Spanish 50-year bond twice at rates close to 1% and prices close to 175. This July 2066 will be eligible to be bought by the asset purchase program in 15 years' time. So there is a lot going on in the market, more than people buying bonds just to deliver them to the ECB. As Sir Robert says, the market is comfortable in a world in which the ECB gets it. Right? That's what they take comfort in. That's what they are comfortable, because the ECB is trying to avoid an unwanted tightening of monetary policy, which is what will undoubtedly happen if there is excessive volatility. So they have globally stabilized the market in a way that has enabled issuers that aren't eligible for purchases by the ECB to find a market and to find a buyer for their product. So what they produce, rather than government financing, is confidence, and they have done so very, very successfully.
Thank you. Thank you both. I think it was a really, really clear and welcome confirmation from your side of what the role of central bank measures have been globally, and how they contributed to underpin, stabilize market conditions. And also, as you referred to, it is dispelling some of the myths that sometimes you can hear or read in the media. Let me move to a slightly different type of question, and it is coming from the audience. It's about technology. Pablo, you made an anecdotal reference of using retail technology for running massive government debt management operations, and also made reference to even having a baby cry influencing a few basis points of a syndication.
Well,
The
that
question,
did happen.
I don't know which way. I don't know which way it went, but the
Remarkably safe throughout.
okay, very good. The question, the question which is coming, and it's really interesting that the pandemic resulted in the deployment of technology to such a scale, which we have all mentioned here. The question here is there are lots of out there about the potential use of blockchain technology in debt trading, in debt issuance, in debt management in general. Do you sense, is anyone seriously considering the deployment of blockchain technology in your operations, or in setting up a framework, or at least some operations on the basis of blockchain technology in the debt management world? I don't know who
So,
would like to take it first.
if there's a pause on my side, it's probably because right now I can answer that and say that right now that is not a consideration. I wouldn't want to say that we would never do something like this, but it's not at this stage a
Yes.
consideration. But it's obviously we would want to watch developments carefully and see how these things evolve over time.
Yes,
Right.
same here. Governments tend to be um, um, not the first to adapt to new technologies. We are boring, we are safe, we are reliable, and we tend to want technologies tested out before we dip our toes, and commend or charge all of government finance to a specific um, distribution technology. What we have works, which is the primary dealership system. And it's pricing bonds, distributing them through a series of banks that we can regulate, that we can incentivize. And blockchain would entail opening that field to a much, much wider array of players. So we're not there. I'm not even going to say we're not there yet, but we find blockchain and distributive ledger technologies absolutely intriguing and part of the future. And it remains to be seen whether capital markets can take full advantage of that. But we have to be careful because what works shouldn't be changed lightly.
Right. Thank you. Thank you very much. I really sincerely think that I would love to continue this conversation for a long time, but according to our team and the organizers, we have run out of our time. And as a closing remark, one point I would like to strongly disagree with your assertions, with your points, is that managers are boring. This was one of the most interesting discussions we have had for the last couple of months. So I would like to thank you very much for agreeing to join the event, and leading such a lively discussion. I really hope that next year, when we follow up and we have the next conference, we would see you back, and then we will have a session about lessons learned of the pandemic in the past, and so we will be all back to this year or this period. And on this note, I will wish you all the best for your for the coming month in the framework of flexibility. And what I can assure you from the market side is that market participants will be there, will be interested in your communications, and will be participating in your issuance programs. So thank you very much again for being with us today, and hope to see you next year.
Thank you very much.
Thank you.
Thank
It's been
you.
a pleasure.
And for housekeeping, we will now have a short break again for networking, where participants can reach out to each other, can also visit the booth of our sponsors or AFME. I suggest that you can also have a coffee if you want. Unfortunately, not in a breakout area, but at home. And I will ask you to be back at 11:05 GMT or 12:05 CET. The conference is going to continue. The role of the host will be taken over by Vicky Webster, who is AFME's Director of Fixed Income. So I would like to say goodbye now, and I will pass the baton to Vicky. When you are back, she's going to continue to lead the sequence of events of the conference further. Thank you again. See you back 1/2 past the hour.